Today we are looking at the silver-gold ratio. Obviously this is Andrew's pitchfork on our ratio chart, and that will be my first point, is that Andrew's pitchforks are valid on any chart, ratio chart, price chart, river level chart over a long period of time. Andrew's pitchforks work. If you're technical analysis, I highly encourage you to learn how to use Andrew's pitchforks. Back to our chart. So this recent activity is interesting because with all the financial and really not just financial but monetary issues that have been going on recently, gold has been performing as money, while silver has been mostly ignored. And so this is what we're seeing here in this chart. And we're on our weekly chart. So we're trying to keep filtering out the small fluctuations and focusing in the weekly chart. So this big plunge in the ratio, this is gold acting as money, while silver is being ignored. And so we get this big plunge in the ratio, and then where's that? 23 March. So end of March, silver's decided to play catch up with gold. And so now we're seeing silver is getting strong, getting happy, however you want to look at that. So silver's starting to play catch up with gold. And let's look at the inverse of this chart. So this is the gold-silver ratio. It's just flop the two metals, and there you go. I tend to prefer this chart, and I think if you're out on the internet, you're more likely to see people talking about the ratio being up over 100. Than you are to hear people talking about the ratios down here at 0.008 or 0.001, whatever. And so here in the gold-silver ratio chart, same thing. So in this period where we get a big spike in the ratio, this is gold acting as money, as basically the financial monetary world, I want to say, falls apart, but that's probably melodramatic. Anyway, gold acting as money while silver gets ignored. Now silver is catching a bid, and the ratio is dropping back down. These are still, this is a very high level for the ratio to be at. So down here playing with 100 again. Let's just, in my historic data, I've only got, in this charting platform, I've only got back to 98. So 20 years of history there. If we want to talk about the historic level of this ratio, we certainly be talking about something around 50 or so. Let me get a horizontal line, and you know, somewhere in there's a support resistance level. Yeah, right about there probably. Yeah. And what's that? So 45. So 45 on the ratio from a more historic perspective. And I certainly expect to see the ratio come back down to at least 50 or so. Looks like 45 wouldn't be surprising. Some scenarios that I think about, I like to imagine the ratio dropping back to its really historic level of 15, 16, and silver owners would be very happy in that scenario. I noticed while I was looking at this chart, this is a pitchfork begging to be drawn, and I'll show you what caught my eye. It's this big, here, give me the bottom of that, yes. And let me change this to the original. It's this big move. Let me zoom back out. So it's this big move that caught my eye. And so I know when I see a big move like that relative to the other price action, that's likely to be the two pivot points for my pitchfork. And then the origin, or the third pivot point, in this case, it's obvious. Well, it's obvious after we've drawn our horizontal support resistance level. And just to clarify that, so look at how this ratio came right down to this level several times, found support, and bounced off. If we come back and look here in the 2011 time frame, ratio has dropped below that support level and came back up to test it and found resistance there, and had to do some work, had to gather some energy before it could break back above that horizontal resistance level at that point. So anyway, basic principles: support becomes resistance, and then resistance becomes support. Not uncommon where we would see price, or in this case a ratio, come back down and test what was resistance, test it for support, and then take back off. In this case, there was enough energy that we didn't have to come back down and test that level for support. And so that's support and resistance. But we were focusing on this new pitchfork that I just drew. And let's scrunch down. I want to get all of the price action here visible. And yeah, let's get that out of our way and that out of our way. There we go. So that fork doesn't really give us any useful new information. We can see, and of course this is exactly what Andrews told us about 80% of the time, that price, or in this case a ratio, is going to come up at least to the median line of the pitchfork, and then there are a couple of different things it can do at that point, actually 5 different things it can do at the median line. In this case, obviously we got a pullback. Almost got back up to the median line again before pulling back, and of course now the ratio has moved on from there. But notice, let me get rid of this blue fork. Notice how the ratio is interacting with the median line of this red pitchfork. Clearly there is a support resistance level at the median line, and you can see it right there in both directions. Here it is, resistance pops through in the next week. We come back this week, we find support. Following week, we drop through, and so that's where we're at now. And we are almost at 10 minutes.